Congratulations, you're rich. The value of your house has gone through the roof over the past 12 or 18 months. In the same amount of time that I've been predicting there won't be a housing crash and people told me that I was an idiot and they were gonna wait for prices to come down before they buy, all those people are still sitting on the sidelines, and you, my friends, who already owned your homes, are just sitting there looking at how rich you are. So, if you're a homeowner and the value of your house has gone through the roof, what should you do? I've got 5 tips. The first thing you should do, whether you've just kind of got in the back of your head about thinking about selling or thinking about doing a refinance or these other things, is figure out what your house is worth. You can go on to Zillow or Realtor.com or Redfin or some of these places and kind of get some online valuation. But if you're really thinking about these things, you can talk to a realtor. They'll do a home evaluation for you for free in the hopes of getting your business to sell your house. So if you do decide to sell, reward that agent with your business, because we work hard for free a lot. So I'm not encouraging you to waste realtors' time, but figuring out what your house is really worth is one thing you need to do. The second thing you should look at doing, if you bought your house with an FHA loan, or you have mortgage insurance, or you have a high rate, or you had a high LTV when you bought the house, you can look at doing a refinance. You can do it to lower your rate. You can do it to pull out equity. The most important thing, if you have mortgage insurance and your house has gone up in value, you can pay $500, get an appraisal done, and get that mortgage insurance off of your payment. I just saved you thousands and thousands of dollars if you didn't know this. So get rid of your mortgage insurance. If you want to pull out some equity, you can do a refinance, or if you just want to lower your interest rate as well, think about doing a refinance. The third thing I suggest, this kind of does and kind of doesn't really have anything to do with your house going up in value, but because your house is worth value, you need to protect your money. As Mr. Wonderful would say, make me money. So if you don't have a will, consider getting a will done. It's just something I thought about when I was thinking about how much my houses are worth, and my wife and I need to update our wills. So being rich makes you think you need to protect those assets. So if you don't have a will, go out, get a will done, and protect what you've already earned. Number 4, this is probably the best one you can do. You can smash the like button down there if you like this video. If you haven't subscribed, consider doing that. It's not really number 4. Number 4 is like number 2, but it's different from number 2 because it's number 4. It's twice a good of idea because it's higher. No, get a Heloc. If you've got the equity in your house, it's very inexpensive to get a Heloc. I suggest people use their Heloc as their emergency fund, and then you can deploy your cash into other investments and other assets. You need to have some money, some actual cash in an emergency fund. But I have a $100,000 Heloc that I have on my primary residence, and that is for a rainy day, or if a good deal pops up somewhere and I want to just make a fast, quick cash offer for another house somewhere. So get a Heloc. It just sits there. It doesn't cost you anything after you have it, and it's just always nice to know you have that money sitting there in case of an emergency, in case you see some kind of awesome deal pop up, or for a rainy day, or for a trip around the world, or to buy a Lambo, whatever you want. Don't buy a Lambo, but get a Heloc. Okay, I went through those 4 pretty quick because I want to spend a little bit more time on number 5. Number 5 is if you're thinking about selling your house or one of your houses, if you own multiple houses like I do. I'm actually considering selling one of my houses, not because the values are way up. Well, I guess that's kind of tempting me a little bit more. But one of my vacation rental properties just takes more work. I feel like because it has gone up a lot in value, that maybe the equity that I have sitting in that house, maybe if I pulled it out, I could deploy it somewhere else and make more money with it. So I actually just got done watching a video of this cute couple, and they sold one of their vacation rental houses. They bought it for like 300 grand. And after 9 months, the market went up so much. I think it was in California. They sold the house for $480,000 or $500,000, and they netted out $180,000 profit from the house in 9 months. That's pretty good. The house was doing really well as a vacation rental, but they decided, hey, let's take this equity out and use the money to go buy something else. And they're going to buy $1 million property because they figured with the 20% down on $1 million, it's 200 grand. They take this 180, they throw in a little bit more money from their cash, and boom, bang, boom, they traded a $300,000 that they have for $1 million house, which on paper sounds like a great idea to me. I actually thought about selling all my houses and just buying one ginormous mansion as a rental, because then I only have one refrigerator and one big ass air conditioning unit and just less headaches instead of 7 different houses with all these problems. But I don't know, I could be wrong on this. Leave me a comment down below if you agree with me or if you disagree with me, but disagree with me nicely and we can have a conversation. Disagree with me by telling me an idiot and I just go bloop and I delete you. So that's not true. Sometimes I'll leave those in there just so people can see how grouchy other people are. But here's my thought on this. Houses have appreciated like 25% in some markets over the last year. So that means that $1 million house was worth $750,000 somewhere else. And these are the higher end markets I think are seeing a little bit more appreciation. And there's some of the lower end markets where I think we're seeing less appreciation. Did I say depreciation? I meant the higher end markets are seeing more appreciation. And I think some of the lower end markets are seeing lower appreciation. Based on neighborhoods, based on demand, and that sort of thing. I think people are trying to get into the vacation rental markets and they're driving up those prices. So I'm actually thinking about selling one of my big vacation rentals, and I don't know, I think I could get around 650, 700,000 for it, and I should be able to pull, I only owe 200,000. So say I pull 400 grand out of that thing, I'm looking at going into like some type B, C neighborhoods, a little bit lower on the economic scale, where I can get a fourplex for $250,000 and trading my one property for 2 fourplexes, and I get 8 units out of that. And you're saying, Jeff, I thought you were just saying you wanted to reduce the number of units. I do, but in the short-term rental game, you pay a property manager 20-25% to take care of your properties. It is too much for me. I can't stomach paying somebody that much money. If you have a property, like say you have 2 or 3 properties that gross $100,000, that's $20,000-$25,000 of your profit just right off the top. And that's basically your profit margin. So by going from short-term rentals to long-term rentals, I'd be going from a 20-25% management fee down to like a 10% management fee, and I can stomach that. So I'm looking at some places like Houston and Tennessee and Alabama, some of these markets that are growing, but they're not going crazy, and not diversifying, but just taking this headache off of my plate that's just exploded in value, and putting it over here with a couple of smaller properties that I can pay somebody to manage, and then just get the income from that and have less problems in my life. I would love to just put it in the stock market, but the capital gains taxes will eat my lunch on $300,000-$400,000. So I'm not gonna do that. I gotta 1031 it into something else. That's why I'm gonna get more real estate with it. But those are my thoughts on 5 things you can do in this market where your house has just exploded in value. I hope you found this helpful. Like I said before, please consider hitting the like button. And if you like this and you want to see more content just like it, you can subscribe to the channel. And by you supporting me, I can continue making this comment for you. So thank you very much. Hey, one more thing. Head over to Instagram and follow me over there. I also have a Facebook page and I have a TikTok. They're all under the same name, Retiramentality. I'll put links down in the description below. But I'm trying to build up those accounts too. I'm going to be starting a members only Facebook group also, if you're interested in getting into there. So follow me on my other accounts and I'll tell you more about it.